Hi, welcome to a financial mathematics video. This time we're having a look at the PAYG income tax system, all about tax. Okay, we're going to have a story of a man called Ethan and his tax year. This will explain the processes that a person goes through when they have to figure out their tax return. Ethan has a job for which he earns $72,000 per year. Must be a hard worker. But we call that the gross income, and that's only our starting point for our tax year. Each fortnight, before he receives his pay in his bank account, his boss sends some money as tax for Ethan to the Australian Taxation Office, or the ATO. The ATO collects these tax amounts throughout the financial year, so each fortnight a certain amount of tax goes to the Australian Tax Office, and the total of that is known as the tax withheld for Ethan. So they collect some tax already that they've collected through the year from his pay, so that he doesn't have to come up with a huge amount of tax at his tax return time. So that is tax that he will have already paid when he comes to calculate his tax return. So this system that the ATO uses of having tax amounts paid through the financial year is known as PAYG, and that's where we get the title of this video. And PAYG stands for Pay As You Go. So each time Ethan was just about to get paid, some of his money goes to the tax office. At tax return time, Ethan takes his gross income and he's able to deduct certain amounts, and these amounts are called allowable deductions. And these are usually for work-related expenses, such as tools. If Ethan was a plumber or a car mechanic, he can buy some tools for his work and deduct that from his gross income for tax purposes. If he uses a computer at home but he uses it for work, he can deduct that from his tax. And if he has to buy a uniform for a certain job, then some overalls or something like that, he can take that amount off his gross income for tax purposes as well. So what happens is the amount left over after these deductions are made, that amount is called Ethan's taxable income, and that taxable income term is very important. That's the main number we use when approaching a tax table and other tax calculations. So taxable income, so far, to sum up what we've done so far, is gross income minus the allowable deductions at tax time. Alright, so we use that taxable income in two ways at tax time. One, we have to calculate what's called a Medicare levy, and this is a levy charged by the government to cover the health system in Australia, so that when you go to the doctor you don't have to pay the full amount. Some of that comes from taxes you've already paid or your parents have paid along the way. And the way we calculate the Medicare levy, I'll show you an example in a minute, but it's 1.5% of taxable income. And the other thing we use taxable income for at tax time is to calculate the income tax that we're supposed to pay. And we do that by applying that taxable income number to a tax table that will be provided for you. So let's get back to Ethan here. He has a gross income of $72,000, and this tax year he has allowable deductions, work-related expenses, of $3,200. And the question might ask us to find his taxable income. So we got through saying that taxable income is that gross income minus allowable deductions. So all we do is take our $72,000 and subtract that allowable deductions amount that's in the question, and the difference will be the taxable income. So in this case it's $68,800 for Ethan. That's his taxable income for the year. Now from that, we said we use the taxable income to calculate Medicare levy. That's one thing we use it for, and it's 1.5% of taxable income, so we're asked to calculate his Medicare levy in part B of the question here. So 1.5% of the taxable income, and we found from Part A the taxable income was $68,800. So we'll just type that into our calculator. 1.5 over 100 is one way of doing it. Times, of means times in that middle section there, and his taxable income we just insert there or substitute in there, 68,800, and on our calculator that'll give us a Medicare levy of $1,032. So Ethan, out of his pay, pays $1,032 to the government as a levy for helping to contribute to the health system. Alright, so the other thing that we use the taxable income for is to find the amount that Ethan needs to pay for his income tax. So there's a tax table provided there. Now let's have a good look at this tax table. We have different taxable incomes down this left-hand column here, and we have the tax calculations that are relevant for each of them on the right-hand side. You can see a few features of this here. If your taxable income is less than $18,200 in this particular tax year, you pay no tax. And if your taxable income is between $18,201 and $37,000, this is the rule, 19 cents for each dollar over $18,200. And then in each of the income tax categories here, they call them brackets, each of those income tax brackets has a different rule for calculating how much income tax a person should pay depending on how much their income is. So let's continue on with the story for Ethan. His taxable income is $68,800. Now, one big thing to notice here is that we have started off applying his taxable income to this tax table. Notice in the question we were given his gross income, but we ignore that because we've gone and taken that gross income and taken our deductions off, or his deductions off, to get that taxable income. So it's the taxable income that has to be applied to this particular tax table, or every tax table for that amount. We can't use the gross income amount. So our first step is to find out what category or tax bracket Ethan's going to be in if his taxable income is $68,800. And you can see that $68,800 is going to fit in this category here. $68,800 is between $37,001 and $80,000. So we decide that that is the row of the tax table here that we're going to take most notice of. And it's that rule there I've just highlighted in blue. $3,572 plus 32.5 cents for each dollar over $37,000. It's a mouthful, it's quite a rule, but I'll break it up for you in a minute. But that's the rule we're going to follow for figuring out how much income tax Ethan is supposed to pay. So we're going to apply his taxable income of $68,800 to that rule of that we just discussed there in that row. So why I've highlighted it there, I'm just going to get rid of the tax table here to give us some working space. So I'm just going to take that essential bit there, that we're following that rule now that $68,000 is fitted into that category that we saw. Alright, so our rule is that he pays $3,272 tax plus a certain amount for each dollar that he's over $37,000. Now you'll notice that this amount here is unhelpfully in cents, whereas all the other amounts are dollars. And so the next bit, I'm going to encourage you to always turn that cents of 32.5 cents into a dollar amount. Now, if we turn that into dollars, we would move the decimal point 2 spots to the left and put a 0 there, so 0.325. I've basically divided that by 100 to turn it into dollars, to turn cents into dollars. So that's how we do that. Now that's pretty important. If you don't do that, it's very unlikely you'll get the question correct. So we've turned that into the dollar version of 32.5 cents, $0.325 dollars, really, we're saying there. For each dollar that's over 37,000. Now you can see that bracket there. That bracket has done a special thing. This section works out how much 68,800 is over 37,000. See, by having a minus in there, this minus here really is telling me the difference between $68,800 and $37,000. So that bit there is giving us this section here, finding out how many dollars, $68,000 in this case, 68,800 is over 37,000. That translates mathematically into that subtraction that's in the brackets there. So throwing all that into your calculator, if you do that carefully and put brackets around where you're supposed to put brackets, you'll get an income tax calculation that indicates that Ethan has to pay income tax of $13,907. And we were asked in sentence form, so we'll answer in sentence form. Ethan's income tax is $13,907. So we've used the tax table to find that out. We found what tax bracket 68,800 was in. We picked the rule, or we wrote down the rule that applies to that tax bracket. And we carefully changed 32.5 cents into a dollar version. And we did that subtraction to figure out how many dollars 68,800 is over 37,000. So quite a lot of work there, but we're just following the rule that we're told to use, really. Alright, find the total tax he needs to pay. So we figured out that there was a Medicare levy, and a levy is really just another term for a tax. So that's kind of coming out of his pay and coming out of his bank account as well. So there's got a Medicare levy of $1,000, or just over $1,000 from answer B. We've got income tax that we just figured out from that tax table of $13,907. That's from the answer to part C of our example. So we've got a total tax payable. That's the income tax plus the Medicare levy. We're just going to add those two amounts together, and that's what we call a total tax payable. That's the total tax that Ethan needs to pay that year. 13,907 plus the 1,032, a total tax payable for Ethan, $14,939. So that's how much he needs to pay across the whole year. Now we got through mentioning before that a certain amount comes out of his pay. His boss sends a certain amount of money on behalf of Ethan to the tax office every fortnight. And so that has to be taken into account. He doesn't have to come up with $14,939 all in one bundle, thankfully. A certain amount has been paid for him out of his tax as he went along, pay as you go. So find the total tax he needs to pay. We'll keep that in mind, ready for the next section. And part E, this is a typical answer, is the last section of the later section, the final sections of an income tax question. Now we just figured out that he has to pay $14,939 altogether, but this question says if Ethan has already paid a total of $14,300 in that PAYG tax out of his pay, from his pay each fortnight, how much more tax must he pay? Now I've put a translation in there. Some textbooks will say, what is his tax liability? Now a liability is like something that you owe. It's like an IOU to the tax department. So that's another way of saying he still owes the tax department something here. Because $14,300 has come out of his pay each fortnight, but have a look at how much he really should pay, and that's more than that, isn't it? $14,939 is his debt, really, or his liability. So his total tax payable is that, $14,939. The tax withheld, which is the fancy term for saying all that total of the money that his boss sent to the tax department across the whole year, it adds up to $14,300 in the question. And so we'll just go through a simple calculation here. If that's the tax he's already paid, he hasn't paid enough tax, has he? His tax liability will be his total tax payable minus what he's paid already. So we're just trying to find that little last bit of tax that he needs to pay. So put those numbers in there. Total tax payable was $14,939. We have his tax withheld, which is the amount that the boss sent to the tax department through the year, and we subtract that and we figure out that his tax liability is still $639. So in sentence form we would say that Ethan must still pay $639 more tax. Now how did we know that he still needed to pay tax? Well, this is the amount that he needs to pay across the whole year, and this is the amount that he has paid out of his pay each each fortnight. That's the total, and see how it doesn't quite make it, does it? He's still got to pay a little bit at tax time, and that's pretty typical of most workers. Either they'll pay a little bit of tax or they might get a refund. Let's have a look at another section here. Perhaps Ethan's boss sent a little bit more out in a circumstance where his boss sent a little bit more tax out of Ethan's pay each fortnight. He might get a tax refund. So let's have a look. If Ethan had already paid a total of $15,850 in that PAYG tax out of his pay each fortnight, find the amount of his tax refund. So we'll just compare these amounts again here. The total tax payable from the last section of the previous screen, $14,939. This time the tax withheld is quite a bit more than that. So he's actually paid tax already that totals more than he needed to, and that sometimes happens. And so we'll just subtract that. We'll just find the difference between those amounts, and that's how much refund Ethan's going to get here. The tax refund this time is the tax withheld, which is the larger amount, minus the total tax payable, which is the smaller amount. So he's paid a little bit more than he needed to, $15,850 minus $14,939, and he has a tax refund coming to him of $911. $911. There's no disaster there. Is it too soon for that joke? Anyway, Ethan will receive $911 as a tax refund. Now, I suppose you could say to yourself, well, how do you know which order you've got? You've got this little rule here with liability being tax payable minus tax withheld, and you can see that I've done a bit of a swap there with tax withheld minus tax payable. Well, I guess you could kind of say as an overall guideline here that if the bigger number comes first, the bigger number comes first in the subtraction, so take the big number and subtract the small number from it, and comparing how much he's paid already compared to how much he should pay, you should be able to figure out whether he has a debt still or a liability to the tax department, or whether he's up for a nice juicy refund. Quite a lot of calculations there, but all we used really were the answers to previous sections of the question. So set your work out nice and clearly, and you shouldn't be having too much trouble. But have a look at this video again if you like. Let's recap a few things. We looked at gross income. We looked at allowable deductions, which came from work-related expenses like tools, and we figured out a taxable income, and that went on that rule there. That's the guide for that. Taxable income equals gross income minus allowable deductions. And we found out two things from the taxable income. We used taxable income for two items: to calculate Medicare levy and to calculate income tax from a tax table. We also had a look at the total tax payable. We added those two taxes and levies together to say that Ethan owed a certain amount altogether to the tax department. But of course he doesn't have to come up with all that tax all at once, because we've got this system in Australia of tax withheld, which is a pay-as-you-go system. Out of Ethan's pay each fortnight and out of most workers' pays, a tax amount goes to the tax department, so you only have to come up with a little bit of a calculation difference at the end. So depending on whether you've paid more than you need to or paid a little bit less than you need to, you might have a tax liability to send to the tax department at tax time, or you might get a little refund, depending on which is bigger, your total tax payable or the taxes you've paid so far, called tax withheld. So there's a lot of terminology there. So if you're having trouble with all those definitions, have a good look at your textbook, have a good look at this video again. We covered a lot of ground there. Look at all those terms we touched base with. So I'm hoping that helps. Play that Ethan's example, Ethan's life story there again, and see how we work it out from gross income right through to whether he gets a tax refund or not. Calculate carefully from that tax table along the way, and notice all the tricks there. Hope that helps, and we'll see you next time for some more mathematics videos from peterblakemaths.com. Thanks for listening.